Welcome to Striking Option. The show that reveals the options you have to better navigate markets. I'm Jeff Kilberg, and I'm joined today by Scott Bauer. Welcome, Scott.
Hey there, Jeff. How are you?
I'm doing well, and it's interesting to see the Federal Reserve delivered the second rate cut of 2019. And now the market seems to be doing well, but at the end of the day, still concerned about that path moving forward for the Federal Reserve.
Yeah, no doubt about it. Like you said, second cut of the year, but some dissension there, and we don't know really what they're thinking moving forward.
And that was interesting. We saw Fed Chair Bullard actually came out with a 50 basis point potential cut, and then we saw two other Fed presidents didn't want a rate cut at all. So that disparity, the dot plot, is that something to be concerned about in Q4 of 2019?
It no doubt is, and there's certainly a lot of factors that are going into this, but the fact that they are fairly undecided about what the next move is will certainly keep some uncertainty and a little bit of volatility in the marketplace.
In layman's term, they're reacting to the market just like every other investor. Let's get this first lightning round. Are you ready?
All right, let's do it.
Gold. Well, we saw the gold reaction, the U.S. dollar reaction, but gold continues to stay elevated above 1,500, Scott. It's a very stubborn trade, but it continues to move higher.
And it's very stubborn, like you said. And the reason is because gold and the dollar usually work inversely to one another, yet we've seen the dollar continue to rally and gold hold its high levels and really continue to rally as well.
So what type of trade example would you approach the gold market as you talk about the stubborn price of gold? It looks like 1,500 is a pretty significant level it wants to hold. What type of trade example can you approach?
Yeah, absolutely. So I'm selling the October gold 1480, 1440 put spread. And selling this put spread would allow an investor to collect about $230. This put spread expires on September 25th, and the at-the-money volatility in the options here is just over 12.
And I find this really interesting. The October futures, the underlying future contract trading around 1,500, but that at-the-money volatility, it's not skyrocketed, but at the same time, you're able to collect something as you're looking at this gold to be elevated above 1,500, at least stay in a range.
Exactly, and that's really what I'm looking at here.
I like that, Scott. And please remember, these are trade examples, not trade recommendations. Let's move in the second lightning round, pal.
Okay.
The Fed. Well, there it is. We talk about the Fed all the time, and it'll be interesting to see, will they have another rate cut? We look at the CME FedWatch tool. That rate cut for one more in 2019 is decreasing just a little bit.
Absolutely, but again, the uncertainty that we talked about with the people on the Fed board here really having some dissenting opinions, so really anything can happen.
And the trade example I want to talk about, just to kind of capture that sentiment of anything could happen, it's interesting to see the 10-year note, that yield, went under 150, went back up to 190. So the call spread I want to talk about here, my trade example, is buying the 130 week 4, selling the week 4 131 call. That's going to cost about $147. But Scott, by buying this, I'm looking for the yield just to drop a little bit.
Absolutely, and again, inversion here, inverted relationship. You're buying the call spread that's looking for yields to drop here.
And the December futures on this trade example, we're trading around 129.15, and at the money volatility, it was just a tick over 5, about 5.06.
And that's what's really important here, because the volatility is down at the lower end here. It makes this call spread that much cheaper.
Well, and as we talk on Striking Options, we really like to buy trade examples of these option spreads when they do really come down lower.
Yep.
So thanks as always for coming on and tuning in to Striking Options, and please tune in every week as we will continue to strike options.